Hope you guys enjoyed the first part of our presentation. Jason did a great job. Don't underestimate how important that trader assessment is. I know that half of you guys, or maybe a quarter of you guys, have already taken it or already plan on taking it. Probably a quarter of you guys have already made up your mind that you're not going to take it. You're not going to do it. And there's probably about half of you out there who are kind of on the fence saying, maybe I'll take it, or maybe you plan on taking it, but if I don't have time, I'd rather do this. I would highly encourage that you do. And I can say this from personal experience. I would not be where I'm at if it weren't for taking a trader assessment. It was the slap in the face that I needed. It was a reality check. It was the number one thing that took me from all talk to action. And I was a talker. I'm not going to go through my whole history, but I was one where it's like, oh yeah, I'll do this. Oh yeah, I'll do that. And I'd never do it, or I'd always make an excuse. And it was literally the wake up call. I was like, crap, I am in the wrong here. I've got to change something. So I would highly encourage taking it. Again, it doesn't take too long. You're going to find out a lot about yourself. You're going to find out a lot about your flaws. You're going to find out a lot about the gaps that you need to take in order to really make the transfer from struggling to consistently profitable trader. So put that on your to-do list. I promise it's going to be worth it. Now, you see on the front of this slide, it says just a dude, and you're probably wondering, why is that up there, right? I've been to presentations and webinars and seminars from people over the internet, and the first thing you always hear them do is tell you how great they are. They've got this many degrees, they went to this college, they worked on Wall Street, this and that, right? Building up that authority. That's what we're supposed to do in these webinars, right? Be an authority figure. We like to tell you a little bit of the opposite here. Now, we do think we are authority figures, but we're just dudes. Jason Graystone, just a dude. Akil Stokes, just a dude. Charles Miles, just a dude. Daryl, OG, just a dude. Anthony, just a dude. Darren, just a dude. Robot, dude. Still under debate. Partial dude. But we like telling you this. We like telling you these stories because I know, for at least me personally, one of the biggest misconceptions and one of the biggest hurdles, I should say, that I had throughout my trading journey was this mental obstacle and this belief or lack thereof that I wasn't meant to be a trader. I couldn't be a trader, right? Everything I saw, everyone I talked to, again, I didn't have the credentials. I'm not supposed to be good at this. And it sounds simple, but that is something that really stalled my progression. Not believing I was good enough to do it. Not believing that regular dudettes, right, could be successful at trading. So I think one of the coolest things for you guys out there, and I think we're all kind of like blue collar type of traders, is all of us here, again, Darren up for debate, we're just dudes. And we've turned ourselves into successful traders by learning the skill and by working our asses off to get good at that skill and be successful with it. And hopefully that is inspiration for many of you guys out there who maybe think that you don't have what it takes. You do. It takes a lot of work. It takes a lot of action. It takes a lot of sacrifice. You got to do things the right way. But it's not like being a professional athlete, right? You don't need a specific set. You don't need to hit the genetic lottery to be good at trading. You just need to work your behind off. So I want to briefly take you through a little bit of my timeline. We're going to look at a lot of technicals. So if you don't have a piece of paper and a pen, or maybe a stylus and a tablet, I would highly recommend getting one right now, because I want you to draw these things out. The best way to retain information is to actually put it from eyes to brain, brain to hand, hand to paper, paper back to hand, hand to eyes, and all that fun stuff. And we're going to run through it pretty quickly. So if you have the opportunity, make sure you do that. But I started my journey really in 1990. No, I'm not that old. But 1990, I was around 5 years old. And that's when my dad first started educating me on money. And trust me, if you're not educated on money, there's no way you're going to be successful in trading. And it was nothing fancy, but just like savings and interest and how compounding works and stuff like that. But I like putting that in my journey because I think that is so important. We found out over the years that one of the reasons so many traders make so many mistakes or come into the market with such a poor mindset is because they don't know how money works, or they have this fear of money. And it starts with eliminating that and educating yourself just on how money actually works. But 2007 is when I got started in investing. I was mainly in the stock market. I was a fundamental type trader. I wasn't necessarily trading off of news events, but I didn't use the charts at all, aside from seeing a price quote. I like to call myself a common sense investor, right? 1 + 1 = 2, putting together common themes and common trends, and I was pretty successful. Now, my journey in the stock market started by basically stalking a mentor. So I did get mentorship, but it didn't start off that way. And the guy that I met was a local millionaire from investing, and he didn't just come out and be like, "Hey, I want to mentor you. Come hang in my office." No, I met him through my wife, and I basically did dirty work for a very long time, where he was on the older side, so I do stuff like mail stuff for him. He had real estate investments. I'd go visit properties and do this and do that. And the payoff was that I got to sit in his office and just watch him work. So I'd sit there, I'd listen to his phone calls, I'd listen to his meetings, and I would just sit there like a fly on the wall and take things in. And that's how I learned how to invest. Eventually, when he saw I was serious, he took more interest in me, and we started taking things to the next level. But I had a pretty good start to my investing career. And this was a good and a bad thing. It was a good thing, obviously, to learn the skill. The bad thing was I got a little bit overconfident. And I was investing in the stock market. I was making pretty good returns, but the monetary value of those pretty good returns wasn't life-changing, mainly because I didn't have a lot of money to invest. And I started searching more stuff on the internet, and I learned about Forex, right? And the first thing, and let me ask you guys this. What was your first impression when you heard about Forex or crypto or binary options? What was the first thing that came to mind? Easy, hard, quick, slow? Michael says get rich quick. Chris says easy. Ada says easy, right? I heard the same high risk. Oh, see, I didn't hear that. I heard, oh, no risk, right? Get rich quick with little work and easy, millionaire within a year, quick money, right? I heard exactly the same thing. The thing that I took from Forex was that I can make more money. And I did penny stocks before this too. I kind of leave that out because that was a very embarrassing period of my career. I was horrible at penny stocks, but it was penny stocks and then Forex. But the idea with both of them was I can make more money using less money, because it was leveraged, in a quicker amount of time. So it was the trifecta, right? I'll repeat that, right? Let me know if this sounds good. I can make more money while using less money in a shorter period of time. Yeah, I'm in. And again, the negative side of being so good in the stock market is that I was so overconfident that I thought, and again, I heard it was easy as well. I thought I'd switch into Forex and just, pick up where I left off, but just do it faster or quicker. And long story short, that wasn't the case, right? I learned 2 years essentially worth of very hard lessons. And I basically had to reset my mind. And I didn't reset my mind, honestly, until I started doing a trader assessment, right? And I left this part out. You see the little picture of my family on the side, right? That is my why, right? That is the reason why I wanted to become a full-time trader, right? I was unemployed at the time, or working 3 odd jobs just because we were at the recession. As I got interested in the markets, I saw it as something that had really everything I wanted in life as someone who wanted to be an entrepreneur, right? There was no boss, right? There was no ceiling to my success. There was no one in my way of deciding if I got a raise or a bonus or anything like that, right? I can basically eat what I kill, right? What I make from the market is all up to me. And I like putting myself in that situation where the better I get, the more reward I can see, right? So monetarily speaking, it worked perfectly. More importantly, it provided not only financial freedom, but freedom of time, right? So my wife and kids, right, they are the reason I do everything. And my whole goal in life is to spend as much time as possible with them. If you guys follow me on social media, you see that all the time. Trading was something that allowed me to make my own hours. Trading was something that gave me mobility. Basically, I can pick up and trade from anywhere that has an internet connection. It doesn't require a lot of hours in front of the chart, right? Jason Graystone mentioned earlier what he takes maybe 5-15 minutes a day to do his analysis. The rest of the time you can make your own schedule. That was very important for me. So that was kind of the thing that really made me want to follow this path, just thinking about how can I set up my perfect life? My boys are energetic, yeah. I wouldn't be surprised if one busts in right now. My little one just started learning about candles. So he's looking at the price chart and he's like, oh, it increased today. I'm like, yeah, right. Which is pretty cool. He's getting to the age where he can actually understand a price chart, and it's funny because a lot of kids can actually understand a price chart better than adults, and then that's one of the problems we're going to touch on in a little bit. Just because they don't have any of those blinding thoughts and whatnot. But eventually, after taking an assessment, after getting mentored once again by a different mentor, after failing and struggling and being hard-headed for years, I finally got good at trading. And I went on to turn my trading into a business, which was managing money. Now, this was a horrible experience, but it was a valuable one as well. I did not like managing money. It went against everything it was very stressful. It went against everything that I wanted to achieve as far as kind of freedom of time. But the biggest benefit in managing money is that I learned a lot about risk management, stuff that I didn't know before, because you got to be a better risk manager when you're trading hundreds of thousands of dollars for other people versus trading your own account. And that's something that I took forward to this day. And in 2012, I started coaching. It took me a while to start coaching. I had no intentions of coaching. I just ended up doing it. I ended up falling in love with it. And, 10 years later, it was the best decision of my life, because not only can I use a skill to either selfishly make money for myself or other wealthy individuals, I have a skill now that I can use, I can pass forward and help others change their life. And we've seen some of the coolest stories since we started Tier 1 trading. A lot more recently over the last few years. We're going to bring some of those people on later in the week about people who we've coached and we've helped. And don't get me wrong, they've done most of the work themselves. But people who have gone on to do life-changing things, and we had a little bit of impact on them. And that's, again, I don't like taking credit for any of that stuff. A small impact, but we helped them. And those are the ones where you get the goosebumps or the chicken skin. So that's pretty cool. So that's a little bit about me. So let's talk about everything I use in my trading. Everything I use in my trading. How did you and Jason met through trading? He was an annoying trader that had lots and lots and lots of questions about everything, which is typically a good sign of success. But we met through the financial markets. We shared an interest in trading, and as we started to build our relationship, we shared a lot more in common. That's my brother from another mother from across the pond, and it was the perfect situation to be able to work with him here at Tier 1 Trading. So it's pretty cool. But let's talk about trading. So what I'm going to do here is I'm going to share with you everything that I use in my personal trading. Right. So we believe in transparency here. We're not hiding anything. There's no like secret formula that we haven't given you to be successful. We're just going to share you everything, because here's the deal, right? You can take a look at that bridge, right? And where you're currently at is on the left hand side of the bridge with the person. Where you want to be is on the right hand side. And the whole theme of this workshop is bridging the gap, right? Helping you get from one side to another. And you can see the bridge has exploded, and it looks like birds are taking the pieces or they're turning into birds. I don't know. It's a weird graphic. But you can look at all the things at the bottom that I've listed as being those pieces. Now, let me ask you this question before we move forward. How many of you guys have spent any time in books, social media, YouTube, learning things about trading? Probably, 100% of you guys? You wouldn't be here if you weren't, right? How many of those things have worked? Meaning you YouTube search double tops and you trade them and they work. Or you YouTube search triangles and they work, right? Probably not a lot of them, right? And the secret to success in trading is this, is firstly understanding that none of these things work in their own right, right? It's, I'm going to butcher his quote, man. Jason mentioned this earlier, but I believe in the same thing about knowledge is not power, right? It's the action you take with that knowledge, but knowing how to use that knowledge, that is the real power, right? So you can know all of this. You can have every tool in the world. If you don't know how to use a tool, does it serve any purpose? I've got a big tool set out in the garage. I'm not the most handy person. I got a bunch of stuff I don't even know how to use. Right? It serves no purpose. The key is understanding how to practically apply what you're learning. And the bad thing about a lot of these videos and books is, especially books, at least the ones I used to read when I was early on in my journey, is they teach you stuff. They do a great job of teaching you what it is, but they handpick situations that work, and they don't really represent how these things should be used in real life. And the truth is, right, you can have all the pieces in the world. You can have all the pieces of this exploded bridge. If you don't have the tools to put them back together, and if you don't know how to put them back together in the right place, do they serve any purpose? Yes or no? No, they serve zero purpose. You've got a toolbox with no knowledge on how to use them. Just a distraction. Yep. I mean, you feel good about knowing a lot of things. You can talk to your friends and you can get on the chat and be like, yeah, double top, head and shoulders. I see it. But when it comes to actually using that to make money in the market, it's, you're going to be a fraud. So I'm going to walk you through all of this because I want you to be knowledgeable about it. Because we're going to do a lot of live chart analysis this week. And I'm going to analyze it the way I would normally analyze it in a live trading environment. And you're going to hear and see a lot of these things. And I want you to be knowledgeable about it. It doesn't mean you need to know how to use it. Trust me, that's not going to happen in a day. But I want you to be knowledgeable about it. So when I look at a chart and I say, hey, double top here, you can identify it. And that's why it's so important. I said this earlier, you write this down. And after this presentation is over, as you go back and watch the review, right, I would go into charts and try to find these things. So if you're serious about trading, if you're serious about taking full advantage of this workshop, right, once the session is over, find an hour, find 2 hours, and just scroll through some random charts and try to find them. Don't worry about how to trade them. Don't worry about how to use them. Just look for it. Work on your RAS, your reticular activated system, and say, this is a double top. Ooh, that's one of those triangle things. Oh, look at that, AB equals CD. It doesn't seem like much right now, but trust me, that practical application is going to do wonders, right, for decreasing your learning curve. So let's start off with classic reversal patterns. These are the classic reversal patterns that I use in the market. I call them classic just because there's stuff that's been in the market for even before there were charts, before charts existed. So, and there's many more. Again, I'm just going to list for you the things that I personally use in my trading, because what you'll find out is that you don't need to use everything. You just need to use the things that are valuable to you. So, classic reversal patterns, right? I use double tops and bottoms. I use the head and shoulders pattern, and I use rising/falling wedges and channels. I did see what happened to gold this morning, gold and silver, yes. So let's talk about double tops and double bottoms. And we're going to run through these quick. If you do have a question, you can shoot it through. I know I'm not going to see all of them. Maybe one of our guys, if you see something important, you can bring it to my attention. Because again, we can't spend a lot of time on this. We're going to be here for like 4 days. But double tops and bottoms, they come basically like they look like W's and M's, right? You can see on the left-hand side is going to be your double bottom. It looks like a W. On the right-hand side is going to be your double top. It looks like the letter M. And this is a classic reversal pattern where you can see price action rallies in a certain direction. We'll start on the left-hand side with the double bottom. And it comes to a reversal point. It creates a V bottom. It gives us a brief retracement. And then we go down to test or retest that initial reversal for a secondary time. Now, on that secondary time, instead of continuing and expanding past it, that same level of structure holds. And then we see a reversal at that area. Double top on your right-hand side is going to be the exact opposite, right? Price action comes off a directional movement. We see a usual pivot or swing retracement in the market. As we come up to that decision point, which is the previous swing looking left, price action once again holds at that level and we see a reversal. Essentially, it is a retest of a newly formed level of structure. All right, does that make sense? Any questions? Simple stuff here. Again, I just want to make sure you guys are familiar with what they look like. Perfect. Easy peasy, right? Next is going to be a head and shoulders, right? Head and shoulders is a little bit more complicated. Maybe complicated is the wrong word. A little bit more complex of a reversal pattern. But this is a loss of momentum pattern that comes at the end of a trend. So on the left-hand side is going to be what's called a head and shoulders top. On the right-hand side is going to be what's called a head and shoulders bottom. And how they're formed is that price action comes from a directional move. Again, this typically happens at the very end of a trend. It comes off a very directional move. We have our normal retracement, and then we follow that up with an extension, which is going to be up here. Now, what you'll notice about this extension is that this extension is going to be on the shorter side of things. And one of the clues that we know about reading a price chart is that one way to tell that a trend is slowing down, perhaps even coming to an end, is by looking and comparing the length of the extensions, right? As the extensions get smaller, we know that the trend is losing steam. So not only do we have a smaller extension up here, but we have a deeper retracement. Another clue that we can look for as far as the judging strength, and that's really what we're in the business of doing when it comes to reading a price chart is judging strength, is looking at the depth of the retracement, right? Short retracements, right, will give us clues that we're in a strong trend. Longer retracements will give us clues that we are in a weak trend. So when we have the combination of a shorter extension here and a longer retracement here, we can put two and two together and think that, what can we think? What do these clues tell us? And they don't tell us for sure like it's going to happen, but these are all clues that we can use to kind of, hey, I need to keep an eye on this. We can have clues that say, hey, we may be getting towards the end of this trend. We're going to talk about trends and how to build them out later. We then follow up that long retracement with a failed extension, meaning that a normal extension would bypass the previous level of structure. This is a failed extension. Basically, we only get halfway up, or basically we don't make it past the previous head. And then as we violate the previous level of structure down here, we have our reversal. And then same thing for the head and shoulders bottom, right? We have our directional move, we have our retracement, we have our shorter extension, we have our longer retracement, we have our refusal to test the previous level of structure, and then finally we have our reversal. That is going to be the head and shoulders pattern, a very frequent pattern in the market, by the way. Next are going to be rising and falling wedges / channels, right? We call these loss of momentum patterns, right? These are setups, again, where we're looking at a directional move and we're trying to look for clues to say, hey, when are we going to see a little bit of relief, right? And it's important to understand that in the markets, right, the ebb and flow, nothing goes up forever, right? The market moves because of the buying and selling interest, right? If a lot of people are interested in buying at a very cheap price or desirable price, the market is going to go up, right? However, what happens when that price gets higher? Let's put yourself in a scenario right here, right? How many of you guys do your own grocery shopping? Right? Because this is the same thing. It's all supply and demand, right? So let's say you go into the grocery store and you see one of your favorite items and it's on sale, right? Buy one, get one free, or it's $2 off, right? Do you think there's going to be more or less buying interest in that particular item? Probably going to be more, right? It's going to be flying off the shelves. Everyone's going to be like, oh, this is a good item. This is a very good price. Buy, right? So there's increased buying pressure for that particular item, right? If you can flip this back to kind of looking at a chart, that's going to cause price action to rise up, right? All of that buying interest. Now, eventually that same item, right, gets to a price where it's a little bit too high, right? It's definitely higher than it was. It's at a price point where it's like, I kind of want it, but I don't want it that much. Now, do you think there's going to be more or less buying interest at that price, at the higher price? Less, right? And as there's less interest at that price, if the store wants to get that product off the shelf, what must it do? It must lower the price, right? When there's super demand, they can raise the price and people are still willing to buy it. When no one wants to buy it, they got to get rid of it. They got to drop the price to intrigue people to buy, right? The markets move in the exact same way, right? So you see these directional moves where everyone is interested in buying until it gets to a specific price. And then it's like, I'm not really interested anymore. And you see the momentum of buyers start to slow down. The rush to that particular product starts to slow down, and eventually you see some type of reversal when there's less buyers interested in the market and there's more sellers, right, interested in the market. And we can see these clues in patterns like rising and falling wedges and channels, where you see a very strong directional move, and then you see the market kind of start to just settle down a little bit. Typically, these are followed by periods of relief where you see a little bit of a retracement. So that's kind of the psychology behind these rising and falling channels. And we're not going to get too much into, I say that now, I don't know what's going to happen when we look at the live charts. But we're not going to get too much into kind of price psychology, just because I don't want to overwhelm you guys too much. We're going to look at a lot of different setups. But that is something that can give you an edge in the market. I think if you understand not just how the market moves, but why, it does provide you just an increased edge in the market. So next, we're going to take a look at breakout patterns, right? So triangles and wedges, flags and pennants, right? So in the previous patterns, we were looking at patterns where you potentially see reversal, so market to move in the opposite direction. These breakout patterns are patterns where we expect price action to go in the same direction as it was previously. So wedges and triangles, these are basically consolidation patterns, right? And contraction leads to expansion. So in these particular patterns, you start to see the range of price action get tighter and tighter and tighter. So imagine like you're squeezing a spring, right? Put a spring in your hand, literally put your hand up right now, squeeze it, squeeze it, squeeze it. What happens after you squeeze that spring? What happens when you let go? Boom, it's going to break out in a particular direction. It's going to spring out of your hands, right? These patterns, we expect the same thing. We see a tightening in the range, right? We see a coiling effect, right? It gets tighter and tighter and tighter and tighter. Eventually, there's no more room for it to get tighter, and boom, it breaks out. Now, what's key to understand is that not all wedges and triangles are created equal, right? There are certain type of triangles that do give you a directional edge, meaning that if I see this particular type of triangle on the right, this is an example of an ascending triangle. And on that particular case, I would predict that price is more likely to break out to the upside. However, in patterns like the wedge on your left, it's pretty much neutral. right? The pattern on your left-hand side, just looking at it in its own perspective right now, there's nothing that tells me it's more likely to break out to the upside versus the downside. So that's very important to know. I think a lot of people, again, you learn this stuff, but you don't actually know how to use it. So you learn these wedges and for some reason, like, oh, break out to the upside. And really you end up being a gambler because it's a 50-50 shot. So it's one thing to be able to identify it and understand it. That's the first part of it, obviously. The second part is to know how to use it and eventually put other tools with it that will help you really solidify a prediction on a consistent basis. Now, next is going to be flags and pennants. These are basically consolidation patterns with a little twist to it, a little addition to it. And the addition is going to be a previous directional move. So on the very left, there's going to be examples of bullish and bearish flag patterns, right? And you can see that the first part of that flag pattern is going to be a directional move, followed by, in the particular case of a flag, a channel that gives you a slight retracement, but you still get that kind of coiling effect. Now, because of that previous directional move and understanding this pattern, these are ones where you can predict a breakout in a certain location. Now, for me personally, I still think a flag has to be at a very particular location overall on your price chart for it to be worth it. But in comparison to like the wedge I just showed you, when you have one that's on your top left, that's going to be a bullish flag because the previous directional move was bullish. You would expect that price is going to break out to the upside. On the bottom is a bearish flag. You would expect that price is going to break out to the downside. In the middle, those are going to be pennant patterns. Those are basically wedges and triangles that come after a directional move. So once again, where a wedge pattern or a triangle pattern in its own right doesn't really give you any clue or anything like that, when you add that previous directional move to it, now all of a sudden it increases the probabilities that we're likely to break out in a specific direction, and that's a powerful tool to understand. Now on the far right, who can tell me what we have here on the far right? These are my favorite. I'm not really a flag and pennant person personally. Again, they have to come in a very particular location. However, on the far right, these are, if not my favorite simple pattern to trade, very, very close. These are going to be called high and tight flags, right? And if you look at the difference between the flag patterns on your far left and the flag pattern on your far right, what differences do you see? Who can tell me? What is different about the pattern on your far right compared to the pattern on your far left? Pop quiz for you. Don't be shy. Direction of the consolidation. One is consolidating lower, like a retracement, like a pullback. The other one is going sideways. Now, let's take it back just a tad, very briefly, on kind of price action psychology, right? So we know that, or if we don't know, now you know, right? The price chart represents a battle between buying and selling pressure, right? Does that make sense to everyone? The price chart represents the constant battle between, I don't like saying buyers and sellers, because buyers can become sellers and sellers can become buyers and that fun stuff, but buying and selling pressure, right? Give me a yes if that makes sense. This needs to be it's a very important starting point, all right? So we know that if price is making a strong directional push in the upward direction, basically who's in control, the buyers or the sellers? I know this seems remedial for some of you guys, but this is very important to understand. And some of you, this is going to be new information, the buyers. If price action is making a very strong directional push in the downward direction, who's in control? Buyers or sellers? Downward direction. Sellers, right? So if we know that pushes to the downside means more selling pressure, less buying pressure. Pushes to the upside mean more buying pressure, less selling pressure. If you look at the comparison between the flag pattern all the way to your left and the high and tight flag pattern all the way to your right, you can notice something, right? In which of these are the buyers controlling more of the momentum? In which of these are the sellers having more difficulty taking over the momentum? The flag pattern on your left or the high and tight flag on your right? Again, which one is the buyers doing a better job of controlling momentum and the sellers having an issue? Right? Nope, not on the left, on the right. Yep, and we can tell that by the depth of the retracement. You see here on the right-hand side how the retracement is very shallow, right? It's unable to escape really the high watermark of the previous upward move. So this tells me that sellers are having a problem pushing this lower. This tells me that buyers are doing a good job of protecting this level. That is a clue that we're likely to continue in the bullish direction. If we take the example on your left, right, the sellers are creating lower lows. So there's a lot more momentum there on the selling side than in this opportunity. Again, these are the small clues that we'll eventually learn to put together that just allow us to make better predictions and really increase our edges in the market. So next we're going to move to harmonic patterns, right? AB equals CD patterns and advanced pattern formations. Now the AB equals CD pattern, this is probably one of the simplest patterns that you'll find in the market. You are basically drawing 3 lines, connecting the dots. But an AB equals CD pattern is a pattern where the extensions come at equal length. So the CD extension here is equal to the AB extension. So the same length. Does that make sense? How many of you guys use AB equals CD patterns? Just curious in your analysis. Phil says, oh, we can say the H word now. I ain't scared. Get the lawyers ready. So the AB equals CD pattern was one of the first patterns that I learned about. This was during the stage where I was learning how to trade, but I was still looking for the shortcut. So I got my trader assessment. I accepted that I needed help. I went and got help. I got mentorship and coaching. I paid for this course. But I still wasn't looking at things the right way. So I was taking my training, but I thought that signing up for training was enough, that I would sign up for training. My coach would teach me the super secret to success, and I'd just be successful because I wrote a check. I was obviously wrong in that assumption, but that's how I thought at the time. So whenever I'm interviewed and I ask about regrets, I don't have a lot of regrets in my journey because I just don't believe in regrets. I believe everything was a learning experience. You learn from your failures. But if I had to choose a regret, it was that I wasted a lot of time trying to learn what to trade instead of how to trade. Does that make sense? The difference? Learning what to trade versus how to trade, right? Learning what to trade is looking for the thing, right? Looking for the AB equals CD pattern, the double top, the moving average cross, and just like, what's the secret to trade? Learning how to trade is actually, again, putting the pieces of that broken bridge together. And I learned AB equals CD patterns. It was simple. It made sense. All I had to do was hit copy and paste, and it was right there. And, I didn't know about back testing or any of that fun stuff. Again, don't laugh at me. This was a long time ago. It was embarrassing. But eventually, I just took a live account and I started trading AB equals CD patterns, putting an aggressive limit order at the end of each decompletion. So if you can imagine that after this decompletion, I would expect some type of reversal, right? So as we're moving from C to D, I would just put an aggressive sell order right here and expect it to work. Yeah. How do you think that worked out for me? Yeah. I never lost so much money so fast in my life. It was incredible. Well, no, I did. I tried to trade the non-farms for a period of time. But aside from that, I never lost so much. It was the stupidest thing in hindsight, the stupidest thing I ever could done. But it was the quick fix. I was looking for the Band-Aid. And I did no testing on it, so I didn't actually know if it worked or not. I didn't even do demo trading. That would have gave me that would have been a warning sign, right? If I started losing on demo accounts. I just traded live because I wanted to make money really, really quick. It was dumb. And many of you guys are laughing at me. Some of you guys are nervously laughing because you're doing the same thing. You're like, haha, yeah, who would do that, Akil? Who would? Not me, not me. Yeah, it felt good. So it should it was the fix. I don't know how else to explain it. Again, I did a lot of dumb stuff back then, which we all do dumb stuff. Just I did dumb stuff with live money, which was the worst. But yeah, so I learned quickly that it wasn't something that was very helpful. Now, I did this with a lot of stuff, not just with AB equals CD patterns. I did this with a lot of things, and I started to form this impression that Forex was rigged, right? I still see that a lot from failing people. Only losers say that, but I shouldn't have said that. I'm about to ask you guys, have you ever thought that way? I just called you guys losers, but it's a losing mindset. Have you guys ever thought or heard that the markets are rigged? Yeah, I put that together horribly. Sorry, but I started forming that opinion because everything I did didn't work. And again, right? AB equals CD pattern doesn't work. Double top, double bottom doesn't work. Moving average cross doesn't work. I'm going to sell every time the RSI goes overbought, right? Doesn't work. And all of these books and all these YouTube channels are telling me how great they are, but when I do it in real life, it doesn't work, so it must be rigged. Can't be me, of course. Yeah, Charles, why would it be me? Come on now. I had so much success in the stock market, couldn't be me. I started thinking it was rigged, and unfortunately, that's a mindset that many of us get into, and many quit because of that. I see so many traders hanging up and they quit because instead of accepting fault on their own, it's rigged. It's a game that can't be won. Despite very successful individuals out there, it's rigged. The truth is, you're taking random pieces of a broken bridge. You're trying to use that one random piece to kind of fix that big gap, and you're falling through. And what's interesting is that, as I evolved as a trader, as I made it out of this kind of dumb stage of doing weird stuff, I actually started going back to so I would use something, guys, and it would fail. I'd lose money, and I would say it was rigged, and I'd throw it in the trash, and I would move on to the next thing. I'd go to the next YouTube search. I go to the next book, and I go to and I kept doing that until I ran out of stuff. And it's interesting that, looking at it, 15 years later, basically, a lot of the stuff that I failed using and I said was rigged and I vowed never to use it again is the same stuff that I use in my trading now, right? It's the same tool. I just now have the knowledge of how to use it the right way. And it makes massive difference, right? I'm no longer taking the hammer and flipping it upside down to try to hit a nail in and wondering why it doesn't work. I'm like, ooh, if I flip it this way, look, now we're on to something, right? But it took a very long time to accept that it's me. And again, that's why it's so important to do that trader assessment, because it's much easier to shift blame than accept blame, guys. It's so much easier to blame the broker, the market, Donald Trump, tsunamis, right? Russia, right? It's so easy to blame everyone else instead of taking blame for yourself. But it's not China. Yeah, it's not until you accept blame and accept fault, and it hurts a little bit. It stings, don't get me wrong, but it's not until you do that your eyes, they become unblinded and you start to really see what it takes. So it's, again, for you guys that are on the fence about that trader assessment, why I'm talking about it so much, I know it's the thing that's going to make a difference. It's going to hurt a little bit, right? But I know it's going to be the thing that makes a difference. So AB equals CD patterns, they sucked for me because I was doing dumb stuff with them. But that's something I use now in my trading for both trading and target projections. Advanced pattern formations. Now, these are the only strategy really that stands out by itself, meaning with everything else I showed you, I use it with other things. So think of them as small clues, small pieces that I'm putting together as part of the puzzle. Advanced patterns, I actually use them in their own right. Now, I don't trade all advanced patterns. There's a bunch of them out there. There's Gartley's, bats, ciphers, sharks, crabs, butterflies. There's probably some other stuff that I don't know about. I only use specific pattern formations. But this has been a staple of my trading. This was actually how I got started on one of my restarts, and every time I failed, I would call it a restart. It was something I got started with just to kind of create a foundation, create something that can make me profit while I put together everything else. So advanced patterns are powerful for me. Also, I pay a lot of attention to candlesticks and candlestick combos, right? This is, I forgot who asked the question earlier. I think it was Ali, about kind of price psychology. I call it price action psychology, right? Instead of just looking at a candle, knowing what a candle actually tells you. And that's a good question for you guys. When you guys look at a chart and you look at a specific candle, give me a yes or no here. Are you actually reading the candle? Like, do you know what the candle is telling you, or are you just saying like bullish or bearish? And be honest. Yes, if you actually can read the candle and know what it tells you, know the story behind it. Say no if it's just like, it's red or green or black or white. It's up or down. Just so I can get a read of the group here. No, yes. Reading, yes. Learning more, yeah. I managed to learn it a little bit, yeah. It's I don't want to say it's necessary, because I don't think any single thing in trading is necessary. But it is a very powerful tool to know what you're actually looking at in the market. It seems kind of weird. It's probably now embarrassing if you don't. But learning how to read a price chart, or a candlestick specifically, which is kind of the smallest part of reading a price chart, it gives you a lot of clues about what the market is doing. And those clues will allow you to make some pretty cool predictions. We'll talk about that later. So a few things: candlesticks and candlestick combinations. You'll see me use this all the time, looking at high momentum, low momentum candles, looking at, we break them into three categories. We call them strong, weak, and neutral, where we'll separate candles into being, hey, this is a strong bullish candle or a strong bearish candle. This is a neutral bullish candle, neutral bearish candle. This is a weak bullish candle, weak bearish candle. It's even gotten to the point, to be honest with you, where I no longer see the color of the candle. I'm not even lying here. I no longer see the color of the candle. I just look at the setup, the open, high, low, close. Like, there will be situations where, so let's take an example of this candle on your far left, right? This red candle right here. So we'd all agree this is a bearish candle. Typically, red is going to be a bearish candle. The close open would be up here at the top. The close would be down here, right? Would you guys in general say this is technically a bearish candle, right? Give me a yes. I need you to type it in. Yeah. So I would actually look at this as a bullish candle. Now that's going to blow a lot of your minds, right? I would actually look at this as a bullish candle. Bullish / neutral is kind of in the middle, I guess, yeah. But I would look at this as a bullish / neutral candle. And the reason I can do that is because I'm looking at the full story, right? So yes, this is technically a bearish candle. The close was lower than the open. But what this candle tells me, the story, is that at price at one point opened here. No, it wasn't a trick question. It technically is and this is the difference between reading it, right? It's technically a bearish candle. The point that I want to make is that when you get where you need to go, I don't even think that will matter, right? Because, so let's look at the story here, right? We opened here. We closed here at the bottom. Technically bearish. Where was the extreme of the move during the session for you guys that know how to read a candlestick, right? So at one point, the bears, the sellers, pushed price all the way down here, right? This wick represents the lowest part of the range, right? So at one point, the price was trading down here. However, we closed up here. So what does that tell you? What happened to take us from here to here? What's your best guess? Or what had to happen? It's not even a guess. Facts. Was it more selling that pushed us up? No. Was it magic? No. Buyers. Buyers took control, right? At one point, this candle probably looked like this candle on your right, where the sellers are going crazy. Oh, selling, yeah. And then boom, slap in the face. Boom, rejected. The buyers push it back up. Does that really give you a positive outlook about future selling pressure? If once they got back here, they basically got rejected? No, that's a bullish sign. That tells you that hey, down in this area, there are buyers that are interested, and the sellers could not defend this territory. Now, how many of you guys, how many, is this new to you guys? Let me know if this is a light bulb moment. We keep a tab of light bulb moments here in the Skype group that we have, and we have this ongoing competition. Graystone has like 53 from the first assessment already. So I'm trying to play catch up here. Yeah. So you don't need to understand this now. But the point I'm trying to make is that it gives you an edge when you can actually read what's happening, when you can actually understand what's happening on the chart. And it is as simple as, yes, a red candle is bearish and a green candle is bullish traditionally. But if you want to separate yourself from the average trader, it's the small bits of knowledge like this. Now imagine your average trader looking at this and selling. Oh, it's a red candle, let's sell. But because you're equipped with this new information and you know how to use it, maybe this is a sign that says, hey, I'm staying out of this trade. You might have saved yourself money. You might have avoided a loser. And avoiding a loser is basically a win. Small things like that. It's amazing how, and we're going to talk about this later as we start building strategies and whatnot throughout the workshop. Edge is very, very tiny. I think a lot of people think of your trading edge as being this big thing that jumps out to you and everyone knows it. Edge is extremely small. Edge is extremely small. And you have to be extremely skilled mentally and technically to take advantage of it. I hope you guys understand that. I think Jason mentioned earlier, would you say, Jason, you take what, maybe 5 trades a week? Right? I'm around the same way. Like if I have I'm probably 15 to 20 a month, which is about the same thing, right? Look at that, yeah, twinsies. When we say that we take 20 trades a month or 5 trades a week, it doesn't mean that we have 20 or per month, 20 potential trading opportunities. We probably have what? Maybe 100, maybe 50, double that. The thing is, we only get involved in about 20. Now, why is that? Why do you think we only get involved in maybe about half of the trading opportunities we actually see? And the number might be higher than that, to be honest with you. Right? Only a few meet the rules. We have the skill of knowing exactly what we need to see that tells us to get involved. We have the rules of knowing exactly what we can't see to tell us to stay out. I don't know how many of you guys saw the weekend midweek market video I did 2 weeks ago. It was on the Aussie Canada. We were dissecting it in a live room, and we're waiting for days on this trade. We're waiting for and we're watching it live, waiting for this lower low, lower close to get involved, and we're not getting it. And I'm like, okay, we're gonna get a double top. We can look for a double top, and then what happens? We got a higher high, higher close. Did we ever enter? For you guys that were in there, no. And guess what that trade did? Blew up in a negative way. But guess who wasn't involved in the trade? None of us. Because we waited for exactly what we need, and we didn't get it. We read the clues, and the clues told us stay out. And we just saved ourselves a losing trade. And trust me when I say this, right? Success in trading, addition by subtraction. Your most profitable trades that you'll be in are the ones that you never get involved in. I'll say it again. The most profitable trades that you'll be in are the ones you never get involved in. Trust me. Trust me. That is the whole story of how I turn my trading around. was just eliminating bad trades. It was not finding more winners. That's the fun thing to talk about on social media. Find more winners. Yeah, all right. Eliminate those losers. Train your eyes to see the clues, right? Because the market doesn't make it easy for you. It will give you very small clues that only a few will be able to recognize. If you can put yourself in a position where you're someone that recognizes it, you just increased your edge. You've just increased your edge. And this is just a piece of the pie. As you acquire more knowledge and you start filling that knowledge gap, you learn more and more. And it all eventually comes together. Now, it doesn't eventually, you have to work hard to put it together. But when it eventually comes together, you have something that's pretty cool. So, unintended rant there, but that's how we roll here. So these are just candlesticks. They tell specific stories, as I kind of briefly mentioned on. Candlestick combinations, right? One of my favorite candlestick combinations to use is going to be a higher high, higher close, or a lower low, lower close, right? Again, it tells me a story. This is a bearish candle. This is a bullish candle. It tells me a story when we can have a candle break and close below the extremes of a previous candle. And then this is called a 3-bar reversal, right? So let's walk through. I'm gonna stay on this. We got plenty of time to talk trading. I'm gonna go way over, but it's cool. Let's stay on the theme of reading a price chart, right? This is a bearish candle. How would you classify this candle? Strong, weak, neutral, a strong candle, right? The open is up here for a bearish candle. The close is down here. We closed at the very extreme, meaning price closed at the lowest point of the session. Bulls tried to push up a little bit, got rejected. We then have this candle down here. Again, we kind of went over this. It's a bearish candle, but is it really a bearish candle? No, this is a weak bearish candle. You can probably look at it as actually being a bullish candle. Why? Because we have this rejection. Not a doji. Doji is going to tell us a different story. This is going to be a doji over here. This is going to be called a pin bar or a hammer. There's millions of words out there. Honestly, that stuff doesn't really matter either. There's a fun story, right? Well, let's finish this first. And then this next candle, what do we have in this next candle? It's a bullish candle, obviously, because it's green. The close opens down here, the close is up here, right? What's important about this candle is, one, we have a higher high, higher close, right? We close above the high of the previous candle. And again, looking at the downside, what does this little wick or tail tell you? It tells you that at one point the sellers tried to push down. How did that work out for them? Not too good, right? Boom, rejected, right? These are clues. These are clues. Many of our traders use this exact candlestick formation as their entry, some of them as a trading strategy in its own right. Now, when I say its own right, it's there's other clues. This is just one clue, but as far as the entry, this would be their entry for it. Funny story real quick while we're on candles, and then we will take a break at some point. But I used to, so when I first learned about candlesticks, I tried to memorize all the different candlesticks out there. Have you guys ever done that? Morning stars and dark cloud covers and haramis. And I would literally, I would draw them out on index cards like a 6th grade spelling test, and I would just memorize them. And I felt so accomplished. I was so proud of myself because like I would look at the thing and be like, harami, yeah. 3 blind men, yeah, right. I would know all the names and what they looked like. Guess what I didn't know. Guess where my knowledge gap was. And this is it's funny. Darren, Charles, Anthony, all you guys know this as well. Graystone, right? It's funny when traders think they know something, but the thing they know really doesn't have any value. Is there any value in knowing the name of these stupid candlestick formations? Like, honestly, is there any practical, like, again, I can sound smart. Oh, yeah, harami, right? I can sound smart on social media, right? But let's talk about, like, practical value. As far as, like, me using it in the market, is sitting there looking at my chart and being like, 3 blind women. Like, what does that actually do? Like, does that tell me how to use them? Like, I didn't know whether I should buy, whether sorry, this is unprofessional, but like, I didn't know whether I should buy, whether I should sell. Like, I just knew the name. That's all I knew. So I was still doing the same dumb stuff in the market where I'd be like, yeah, Three blind mice, sell. I'm like, is that a sell? I don't know, but I found it. I found it. I found you. It's the stupidest thing. We were talking. This is gonna be an inside joke. Darren shared with me a video the other day of like home safety and defending your house and all this fun stuff, and was talking about ways to kind of defuse the situation, like if you get like a home intruder. So I'm imagining myself, Darren, like an armed person breaking into my house. This is a good analogy. I'm imagining an armed person breaking into my house and trying to rob and kidnap my kids, right? And I'm running downstairs with my finger, right? My finger guns, and I'm just like, ha, I gotcha. He's sitting there with a loaded weapon. I'm just pointing at him, yeah, I gotcha. And I'm like, okay, now what? Now what do I do? Didn't think the rest of that through, right? I found you. That was part one of home invasion. I found you. That was me in the market, guys. I was just looking for stuff and I would gotcha. And I didn't know what to do after that. And I'd end up getting destroyed. Another embarrassing story. But yeah, it's funny. I'm glad I can look back at this stuff and laugh at it now. At the time, it was not so laughable. But it's been 10 years, so all that time, it flies now. But yeah, pew pew, finger pointers. So next is tools and indicators, guys. Tools and indicators. I use Fibonacci. I use the RSI, which is the relative strength index. I use the ATR, which is the average true range. I don't actually use the ATR indicator. I mean, I don't need to see it on my chart, but I do value the value of the ATR. That's probably, I would say that is the most important indicator for me. The ATR, I use it the most. VS1 zones and our Enigma pattern recognition tool. So these are the indicators that I use. So it's important that you're going to hear Jason and I talk about we're price action traders. Meaning price action is at the forefront of everything we use in our analysis. We learn how to read price, make predictions, and whatnot. We do use indicators. We're not against indicators. We don't think indicators are stupid or dumb or anything like that. We just think people do dumb things with indicators. So where it gets dumb is where people bring on a MACD and they're just like, every time it crosses the zero line, I'm selling it or buying it. Like, that's stupid. Again, that's someone invades your house and that's going out there with the finger guns, pointing, gotcha, right? So we're not against tools. We think tools and indicators can be very helpful. Again, it goes back to the common theme. People aren't using them right. Like, you're learning all the stuff. There are no secrets out there. Like, in this time and age where you have YouTube, like, we have more information available to us than ever, right? I would dare someone to tell me that you can find an answer to anything on the internet. Am I wrong in saying that? You can learn every single thing there is about trading on the internet. I'm not saying that's a good thing, but you can, right? You can. But it's all pointless if you don't know how to use it. And that's the problem. People don't know how to use it. So, like, indicators aren't bad. People just don't know how to use it the right way. And hopefully that's the point we can get across as we hammer it into your skull for the next 5 days. It makes me so angry, though, although I was that person too, so I understand. So we do use tools. Fibonacci tools, just to quicken things up so we can get to our next break. Fibonacci tools, I use them a lot for retracements and extensions, so basically projections. Again, they are a tool. They're not used outright, but they're a massive help in projecting where a price can go, whether we're looking at a retracement or whether we're looking at an extension. The RSI, I mentioned the ATR already. The RSI is a tool that I use in many different ways. I use the RSI to help look for reversal situations. We've overbought and oversold this. Again, I would warn you, if you attempt to just sell every time the market goes overbought and buy every time it goes oversold, you're going to lose a lot of money very, very quickly. We've got various donations or various charities that we donate to on a regular basis. You're better off just writing one of us a check. But the RSI is a helpful tool when it comes to reversal. Divergences are a good way to use the RSI as well. I apologize, I didn't put together a slide on divergence. I didn't plan on talking about it, but we'll see it on the price chart, I'm sure. That's another way to use it. And there's many other ways you can use the RSI as well. I would say this. How many of you guys are indicator traders out there? You use indicators? 1, 2, it doesn't matter. It's not, don't feel bad. Any of you guys use indicators? I would say here's the key, right? Again, they're not bad, but just know how to use them. Know what your indicator tells you. Write these down. These are going to be very important lessons. 3 very important lessons, right? 1, know what your indicator tells you, right? Know what it tells you. 2, understand that it probably has more uses than the one that you just saw on the internet. The common use probably isn't the best usage of it. And 3, you have to tweak it. The default values are probably not going to help you a lot. You have to tweak your indicators, settings, parameters so that they fit with what you want it to tell you. And that is going to change from market to market. That is going to change from pair to pair. But you have to do that. You have to do that. Don't just think the default is the best setting. It is not. You have to understand, again, what you want your indicator to tell you. You have to tweak those parameters so it actually tells you or complements what you're seeing on the price chart. That's very important. VS1 indicator. We're going to get into structure after the break, but structure is the number one thing that I use in trading. It is by far the backbone of my trading. Every single thing I do is based around structure. Doesn't mean that it has to be for you, right? There are different ways you can trade. There's endless ways you can trade. But for me, in my price action trading, structure is everything. So what the VS1 indicator does is it basically gives you a visual level of support and resistance. It's very helpful. Thank you, Anthony, because it brings my eyes, it brings the attention of my eyes to levels that I might otherwise overlook. So I can tell you what, and you guys, you'll see it when we get on live charts here. When you see a big red or green box or purple and blue chart or a box, you know that there's something there, to know that there's something you should pay attention to. It helps you make those adjustments. If you're unfamiliar with reading structure, it also tells you what levels are important and what levels aren't important. So it's a massive clue. We've had many traders that actually developed strategies just off of these zones. If price action hits this zone, then look for XYZ. Last is going to be the Enigma indicator. This is our pattern recognition software. This is massive help as well because, again, it acts as like more eyes on the market for me. So I use this when I do my daily scans. Because I'm doing so much on the education space, I often kind of rush through and overlook things, which is a flaw of mine. So when I can have a secondary, basically, set of eyes, right, a mechanical set of eyes on the market, and I can just click the button and it brings stuff to my attention. It doesn't mean that I'm going to trade everything this pattern recognition software shows me. But I can look at it. I can then measure it on and make the observation, hey, is this one I would trade or is this one that I shouldn't trade? So again, it's a support system just like the VS1.